Hi and welcome to Swissquote's Daily Market Talk. It's Monday, December 16th. The week starts with little enthusiasm in China, where stimulus announcement was again not enough to boost appetite. Then France has a new prime minister, but Moody's lowered the country's credit rating due to political fragmentation there. Then Germany will hold a confidence vote as soon as today, and that could lead to a snap election in February, while Korean politics is a mess. In the individual stocks front, Broadcom stole the spotlight from the other chip makers last Friday, while the Fed, the Bank of England, and the Bank of Japan will announce their latest monetary policy decisions this week. So tune in, we have a lot to talk about. So China's latest efforts to convince investors that it will boost its economy with great stimulus measures had the same exact reaction than the previous ones: disappointment. So on Friday, the Chinese authorities repeated yet again that they will try to boost consumption in China, but the lack of details regarding that stimulus reversed the pre-announcement enthusiasm in the markets and sent the CSI 300 index more than 2% lower on Friday. And the Chinese stocks were again sold today on the back of a significant slowdown in retail sales growth in China last month that came as a confirmation that whatever is done in China is not bearing fruit. Meanwhile, the Chinese yields nosedive does nothing to motivate investors to come back. The yields there are at the lowest levels on record. That's a massive problem, mind you, that reminds investors of Japan decades ago, which struggled with the famous liquidity trap dilemma, where the low interest rates couldn't boost consumption in Japan and kept the country's economy in a low gear for decades. Now, the only thing that could make a difference for China at this stage is, that Japan was already rich when this liquidity trap happened, while China is not. But anyway, there are still bright spots in China if you look well into the economy. Xiaomi, for example, is having the time of its life these days. Its stock price doubled since August this year and is up by 154% since February as the company prepares to launch a pure electric SUV to compete the world leaders like BYD and Tesla. So they have been incredibly successful in competing in the crowded smartphone market, remember, with high performance but low price phones. So it looks like they could do the exact same in the electric vehicle space. In Korea, the political turmoil continues, and that's continuing to weigh on sentiment. While in France, the relief on the appointment of François Bayrou, who is just another very established and well-known in French politics, to replace Michel Barnier as the new French prime minister, probably to struggle with the exact same divided government in France as his predecessor, was quite clouded by Moody's downgrading the French credit rating to AA3, so that's 3 levels below the top. So Moody's blamed France because of its political fragmentation. And we'll see how the markets react really, because the CAC 40 has recovered quite well, surprisingly well indeed, since its November dip on confidence from investors' side that France will and could survive to a divided government or even no government at all. But the fact is that the budget issues in France will be very difficult to solve with such a mosaic composition in the French parliament. Maybe, but just maybe, Germany could come in and save the day today. Who knows? The country is dealing with its own political issues. Yes, politicians there will be holding a confidence vote that will probably lead to a snap election in February. That's not cool at all. But the German opposition said that they will maintain their borrowing limit unchanged if they come to power next year. And that was opposed to the earlier statements from the CDU leader Friedrich Merz about his openness regarding increasing that borrowing limit to give more support to Germany's struggling economy, which obviously is not ideal for the budget discipline and not ideal for the market perspective. So to summarize, Well, nothing but nothing is less clear than the political picture in the Eurozone's two strongest economies, Germany and France. So the bets that the European Central Bank must do the heavy lifting moving forward remains quite strong after last week's cautious 25 base point cut from the ECB. Now, the expectation is that the European Central Bank will be delivering another 25 base point cut when it meets in January. But that dovishness is mostly priced in. Therefore, the euro dollar should eventually find enough support near the 105 psychological level and could re-challenge the 106 offers to the upside. Across the channel, well, cable is slightly better bid this Monday morning, but Friday's disappointing set of data there in the UK that hinted at surprisingly worse industrial and manufacturing production, topped with unfortunately, a surprisingly soft services at this time of the year, warned once again that the British economy will probably see the backdrop of tax increases before it starts seeing the benefits of government spending. So the Bank of England is expected to maintain its rate unchanged when it meets this week, well, to make sure to balance out the UK government's spending plans next year. But some officials at the BOE could actually sound more dovish on the back of weak growth numbers that we saw last week. As per Sterling, well, the sell-off could slow on the back of a cautious Bank of England this week and an unnecessarily soft Fed, of course, but the dream of seeing cable and this year above the 130 psychological mark is melting by the day, guys. In Japan, while the dollar yen is gaining some traction to the upside right now as investors and traders are trimming their bets for a Bank of Japan interest rate hike this week. But note that some officials at the BOJ had said earlier this month that waiting for the next rate hike in Japan would make little sense. So there is still this chance that the BOJ goes ahead with a rate hike as soon as this week, a decision that could cap the dollar yen's ascent near the 155 level, at least before that decision. While in the US, the Federal Reserve is expected to trim its rates by another 25 basis points when it meets this week. Now, last week's CPI print from the US was eventless, and the jump that we saw in the PPI number to 3% was mostly wiped out as egg prices were mostly responsible for that uptick. Now, what the Fed will announce about next meetings will probably matter more than this week's cut, in my opinion. So it could go both ways, really. On one hand, Powell recognizes that the US economy and the US jobs market remains resilient. And on the other hand, well, Trump's pro-growth policies and his tariff threats could boost inflation again. So there is nothing in both hands that would justify bold interest rate cuts in 2025 in the US other than making the stock investors happy, of course. And happy the stock investors in the US are, really. The S&P 500 closed last week near record high, while Nasdaq advanced to a fresh record high on Friday's trading session. This time it was Broadcom's turn to shine, really. The company's stock price jumped 24% on Friday to a record high after announcing better than expected earnings, and especially after saying that it expects a booming demand for their custom-made AI chips. And remember, Broadcom and Apple had announced to build a chip together just a day before. So some would obviously disagree with me, but the technology company's willingness today to build their own chips could be an opening for companies like Broadcom, for example, in this AI race, if they obviously succeed in delivering strong, custom-made and cheaper AI solutions. That's probably why Nvidia, which saw 50% of its revenue from big technology companies, slipped more than 2% on Broadcom news on Friday. Now, Nvidia's ecosystem of software, tools, and its AI research infrastructure remains a powerful defense, but its high valuation is obviously a risk for the newcomers in this market. And elsewhere, MicroStrategy and FedEx will be going to the earnings confessional this week. So it's going to be another big week of trading, guys. But we are going to cover all that as the news flow in. But this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.